Well, hi everyone, welcome to the Buffett and Beyond weekly video stock analysis, and this methodology is based on the book Buffett and Beyond 2nd edition, published by Wiley Publishing. And this week we're going over Taiwan Semiconductor because it's up 50% in the past 3 months, coming off a bottom, and folks, it is rocking and rolling out there. So remember, if you want to walk on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. So, folks, let's go over Taiwan Semi. It's a manufacturing company, pioneered the dedicated semiconductor foundry in 1987 and is the world's largest dedicated foundry. Now, the earnings per share, this is important here, folks, catapulted nearly 54% on a year-over-year basis thanks to a 35% advance at the top line. That means they increased their revenues 35% and turned that into 54% increase. That is very, very nice. And why? Continued strong demand for AI-related products more than offset normal seasonality in smartphones. And Taiwan Semiconductor is a primary supplier, folks, this is important, of chips to industry heavyweight NVIDIA, which augurs well for sales growth moving forward thanks to strong demand for AI-related chips. Again, here we go with AI. And annual manufacturing capacity is 16 million wafers. I'm not sure what that means, but it sounds good. Has about 76,000 employees. Now, here's the kicker. Yes, Taiwan Semiconductor Manufacturing is significantly expanding its presence in Arizona with a $165 billion investment. That's a B, folks, $165 billion, including building multiple semiconductor fabrication plants, advanced packaging facilities, and a research and development center foundry. So, folks, yeah, it's really, really doing well. And why was everybody so scared about this stock, and why did it fall so much? It's because Taiwan makes most of its semiconductors in Taiwan. So Taiwan Semi is in an area where the Chinese say Taiwan really belongs to China, and everybody's worried about China invading Taiwan and taking it over. So, but building out here in Arizona, not that I'm out there in Arizona, but building in Arizona in the United States takes a lot of that fear and worry out of investing in this company. So let's look at Taiwan Semiconductor, which is in green, and it's comparing to the average stock in our database. And we're talking about the clean surplus return on equity. And folks, clean surplus return on equity is totally different than the traditional accounting return on equity. Totally different. Clean surplus is a comparable ratio, so we can compare the clean surplus ROE to the average stock or to any individual stock. That's why this is so important. And that's why we want to see all the stocks in our portfolio well above the average stock out there so that we can outperform the average stock, which most money managers cannot do. Net income, almost doubling that of the average stock out there. Revenue, more than doubling the average stock out there. So Taiwan Semiconductor firing on all 8 cylinders. Now let's look at the individual years, and what we want to look at is how this net income, now what's net income? It is the clean surplus earnings, because traditional accounting earnings include non-recurring items and future liabilities, where clean surplus earnings, called net income, takes all that out of the formula. That's why we can compare our stocks that we, or anything that's calculated in the clean surplus methodology, to any other stock. But we want to see the net income rising every year, and boy, it has. And with the average stock with the clean surplus return on equity of 13%, we want to put stocks with 20% or above in our portfolio, and folks, Taiwan Semiconductor fits the bill. Now we went over net income and revenue growth. Years to pay debt, it's 0.1 years. What this means is, it's Buffett's rule of thumb, is if the company takes all the money it makes and invests it back into itself to pay the debt, how many years would it take to pay debt? 0.1 means this company can pay off all its debt in about 1 month worth of income. Very, very nice. And dividend 1.1%. So folks, this company is looking good on all fronts. Now, let's go to the returns over the past 1 year, and the black line is the S&P 500, the yellow line is Taiwan Semiconductor, and you can see that it was just following the market in here for a while. It had a big drop down with the drop that we've had about 3 months ago, and then all of a sudden formed this double bottom down here and took off like a rocket to new highs. Let's look at the last 5 years, and here we are. You can see where it came down with the market in 2022, played around with the market in here. That there were fears of Taiwan and China, so investors were worried about this stock, and then all of a sudden, with the news that it was building in Arizona, it took that fear away, at least partially away. Stock went running up, and then it fell in the beginning of this year, as we talked about, and then has taken off once again, all new time highs. Very, very nice. And it's got the NVIDIA is its friend. It's not its foe. It's not in competition with NVIDIA. It's a supplier for NVIDIA. And folks, remember what this clean surplus analysis is all about, and what our goal is. You want to build your wealth faster and safer with better than average stocks. How do you find the better than average stocks? You have to have a comparable method of comparing one stock to another, and that's what clean surplus analysis is. So, folks, here we are. You go out and you have yourself a great weekend, because if you want to sail on this ship like Jimmy Buffett supposedly did, you've got to learn how to invest even better than Warren Buffett. So, folks, go out, have a safe weekend, and we'll see you right back here in a couple of days.